But it's funny because Chamath is actually one of those quote populist billionaires, or the left flank of capital. He's been. I've actually played him on the show before because he says Wall Street and the rich are totally out of control. It's funny that he's saying exactly what he's saying. So, for example, he wants to cripple big tech companies and break them up. So this is U.S. shouldn't bail out hedge funds, billionaires.
And I think we all agree with you that more money from Main Street is needed. Maybe not in spite of the money to all of these companies or whatever that make up the economy as well. That more money is needed everywhere, perhaps. But are you suggesting you keep saying propping up zombie companies? Are you arguing to let airlines, for example, fail?
Yes.
Why? I mean, how does that make sense in the broader scheme of the economy?
Because it's not, because when you look at what it means, this is why I'm saying, like, this is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt, or the folks that own the equity. And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out. But the employees don't get wiped out. The pensions don't typically get wiped out.
Why does anybody, I just don't understand, why does anybody deserve, using your word, to get wiped out from a crisis created like this? How does anybody deserve to get wiped out?
Well, but just be clear, like, who are we talking about? We're talking about a hedge fund that serves a bunch of billionaire family offices? Who cares? Let them get wiped out. Who cares? They don't get to summer in the Hamptons? Who cares?
I mean, there are people. You don't think the employees?
Hold on, Scott.
You don't think the employees of these companies own stocks? I mean, own their stocks, own the company's stocks?
You can look on Bloomberg and you can see what percentage of these companies are typically owned by. These things are owned by BlackRock. These things are owned by these huge, amorphous organizations. Ultimately, downstream, and the employee owns a few $100s or a few $1,000s of shares.
Well, I just don't understand. So this is like a natural disaster. And why does anybody deserve to get wiped out? Wouldn't that be immoral in and of itself?
No, because what's happening right now is what I'll tell you is on Main Street today, people are getting wiped out. And right now, rich CEOs are not. Boards that had horrible governance are not. Hedge funds are not. People are. 6 million people just this week alone basically saying, holy mackerel, I don't know how I'm going to make my own expenses for the next few weeks, days, months. So it's happening today to individual Americans. And what we've done is disproportionately prop up and protect poor performing CEOs, companies, and boards. And you have to wash these people out.
So it doesn't surprise me that he jumped on board with the rest of the plebeians and destroyed the hedge funders. Now, if people like that were running our government, if that was the type of capitalists that were running things might not be as shit as they are, and might not have, we might not be in as desperate a situation as we are. But guess what? They're not. He is a dissenter, and he doesn't have any power. Is he the real fake? Is he a real or fake class trader? I mean, I wouldn't call him a real class trader, okay? I'm not saying he's great. It just doesn't surprise me that he's the one. He's running for California governor. All right, we'll see if he's actually a class trader or not. Of course, people lose their fucking jobs when a company goes bankrupt and they restructure, refinance, downsize, lay off workers, etc. This is a dishonest, greasy, wheezy, lying-ass Wall Street dipshit is arguing in bad faith. Couple of things here. It depends on how you do. Okay, that doesn't have to be true, Funkadelic. You're right that it could be true, but it doesn't have to be true. For example, if the government's going to give a bailout to the airlines, they could just take over the airline and have it be either nationalized or employee owned. United Airlines used to be the biggest, largest UAA employee owned company. But you know what happened? Do you know what happened? After 9/11, They took the company away from the employees and gave it back to Wall Street. They took it away from the employees and gave it to Wall Street. Now suddenly when coronavirus happens, we need to prop up the hedge fund. We need to prop up Wall Street. It's weird that when 9/11 happened, you take away from the airlines the literal people who died in the fucking crash. Their families lost control of the company and it went to Wall Street. But when the shoe's on the other foot, the rescue keeps everything in place. Isn't that weird? Isn't that weird? Also, the year ended with UAL seeking immediate voluntary wage reductions from all employee all employee groups, or permission from the bankruptcy court to oppose those reductions in order to meet the strict covenants established by the DIP lenders. So, UAL went from being employee owned to bank owned to privately owned. And they did it by cutting the wages of the employees who were fucked by what? A terrorist attack. Through no fault of their own, they lost their company and it went into private hands. Wow, what a bailout for our airliners. Weird that. Just remember that. Just remember that. Didn't Boeing reject the government bailout because they didn't want to give up percent ownership? So basically they didn't need the money. No, they did need the money. I think they just got the bailout later. Pro-worker democratic control of a company is the exception, not the norm. Generally speaking, the people who are going to hurt the most when a company fails are their most vulnerable, poorest workers, the most precarious, sensitive positions. Funkadelic, you are... Let me just tell you. I understand what you're saying, but it doesn't have to be that way. You're describing things that happen because of the way our crooked system is set up. I cannot believe they pumped AMC 200% in one day. Mike, I need to know what stonks to buy right now. Don't buy stonks! Hashtag save AMC on Twitter. LOL. Jesus Christ. Cinemas have zero revenue right now. It's insanity. Yes, of course it's insane. Of course it's insane. It's called a pump. Now we're just waiting for the dump. Now we're just waiting for this. The fear, the capitulation, and the despair. We're in the mania phase right now, chat. We're in the mania phase. We're waiting for the blow-off phase. Aren't pump and dumps illegal? Yes, if they're coordinated. Who's coordinating it? What's the group that's coordinating it? Honest question, do you think the stock market thing is any different with the amount of collectiveness going on in terms of technology and social media? All right, we're above 5K subs. That's nice. Do you have any badass debates on the channel? Of course, we have amazing debates on the channel. They never recommend you, Mike Pago. That's because we just started posting this month.
Thanks for the show. What a ride.
Thank you, Mr. Cooperkins. Now, I don't know how long GameStop is going to sit here at 350. Let me take a look at a candlestick chart. Let me go and get in a candlestick chart. Does Yahoo have candlestick setting? Who has candlesticks? Does Google? That was almost a bad one. I almost opened my email right in the middle of stream. God. Here. I need candlesticks. Who has a candlestick chart, chat? Who's doing it? I bought AMC last night, but I didn't go through because the price jumped too much at open. Yeah. So you did. You put an order in. They're doing the same thing that Nokia stocks right now. Oh boy. Am I being a boomer? Top left, the line chart. There we go. Okay, so what am I trying to show you, chat? Okay, so basically the way the candle chart works is these lines are so you have a segment of time, and the lines, the wicks, they represent the lowest part and the highest part of the price action within that time period. So this is a 1 minute price action. So in this minute, it started down here, and then it was bought all the way up here, and then it was sold back down, and then it was up from that. So basically you can see the entire price action within the minute, and you can see, for example, in this minute, it started at this time and finished at this time. So this minute, it almost went completely down. And then in the very next minute, it went almost completely up and then went back down a little bit. And then there's the next candle. Does that make sense? Does anybody understand what I'm trying to show you? Are you all understanding? Okay, great. So you could basically see what, and the color is, if it's red, that means that it started up here and ended here. If it's green, it means it started here and ended here. And the wicks are the range of the price, because sometime during it went down to that and went back up. Does that make sense? So what we're seeing right now is, I'm seeing a lot of what are known as spinning tops. Okay? Spinning top typically is a sign that the buyers and the sellers are pretty balanced within that period of time. You know, these solid bars, those are indications of one side is bigger than the other side, right? So if you see a lot of red candles in a row, that means there was a lot more sellers in that period. And that makes sense because you could see the price going down. If you see solid green bars, it's the other way. If you see spinning tops, that means the price action is balanced. And then there's all these different formations that people have invented and say that they're that they mean something for the psychology of a market. But overall, it's been it got up to that really big peak, right? Almost completely straight up in this big peak. And then it was hammered down. It was hammered down from that peak. And since then, it's been this kind of like hesitation, pretty even trades. The bears get a little bit of a momentum, and then they are immediately then the bulls get some momentum, and then we have a lot of period of pretty balance. This similar thing happened yesterday. Let me see if I can get yesterday. Similar thing happened yesterday where you had like earlier in the morning. We said we had this kind of like same thing, and then it gapped up. So I don't know, chat. I can't call tops in stocks. I don't think anybody can.
That edge, Joe Saluzzi claims, has made high-frequency traders the new insiders on Wall Street. And he says he spots signs of predatory behavior every day. Saluzzi, who trades large blocks of stock for institutional investors, says the supercomputers are programmed to place and then cancel thousands of orders a second, trying to sniff out which way a market is moving in order to jump in ahead of big rallies and sell off before big declines.
Oh, you redeem Romeo?
He calls them parasites who exploit a technological advantage to suck money out of the market and add no value. Leibowitz of the New York Stock Exchange says there is absolutely no evidence that small investors are being hurt by high-frequency trading. Most of them, he says, don't care about pennies when they're buying and selling stocks, and they're in it for the longer haul.
Of course! Oh, they don't care that they're being screwed. They don't care that everybody is paying unnecessary fees and not getting the true value. They don't care that they're getting squeezed. What? There's no evidence that you care that you're man, do you care if you're losing money? No, you don't care.
Look, there's always been charges for as long as trading has existed that people are front-running orders, manipulating stocks. This is nothing new.
Because they did it. It was called a bucket shop. In case you were wondering, bucket shop. A bucket shop is a brokerage firm that engages in unethical business practices. Historically, the term was used to refer to firms that allowed their customers to gamble on stock prices, offering using dangerously high levels of leverage. Oh, they're not doing any of that gambling in this. I can't believe there's any gambling in this casino.
I think now you add to it the element of the mysterious element of the computer, and it makes people even more mistrustful.
Leibowitz and
Listen,
other
he's not gambling. He's buying derivatives. That's not gambling. They're 10x derivative. That's not gambling at all.
Opponents of high-frequency, high-speed computer trading say it's performed a valuable function, tripling volume, reducing stock spreads and transaction costs, and providing liquidity to the markets.
Liquidity means that if you want to buy or sell a stock, you could do it right away, and you could do it at a fair price. That's what liquidity means. And without short-term traders, there is no liquidity.
Traders like Manoj Narang say their presence in the market is making it cheaper and easier for everyone to buy and sell stocks. Right now, it's not even possible to determine for sure who is making high-frequency trades or what they're telling their computers to do. Which takes us back to the mini crash last year and one of the scariest rides in stock market history, when Dow Industrials at one point plunged 600 points for no apparent reason. Turns out it was triggered when a mutual fund's computer dumped $4.1 billion of securities on the market in a 20-minute period, which were then gobbled up by the computers of high-frequency traders and then sold almost immediately, sending other computers and traders heading for the exits. The crash has contributed to a crisis in confidence on Wall Street. Afterwards, people pulled more than $70 billion out of mutual funds, and the biggest concern of Chairman Shapiro and Senator Kaufman is that average investors are losing faith in the integrity of the system.
And there are a lot of people out there who think that the stock market is rigged. Rigged in the sense that there are people out there who have advantages, the insiders,
Right.
the big companies.
Yep. And I think that we have to do a better job of, first, obviously making sure it's not the case, but we can't be evasive about it. We have to make changes that make sense.
Wait a minute, I thought it was fine, but now he's saying, yeah, well, we need to not be evasive and make changes that make sense. It's almost like it's rigged.
Give people more confidence in the market, add more transparency, and make people feel like this is a place I can trust my retirement savings to.
Since we first aired this story, the Securities and Exchange Commission has proposed further reforms, and high-frequency traders are now moving into currency and commodity markets.
There's no problem with that. So what's the deal with AMC today? Uh-oh, we're off the highs, chat. We're off the highs. Same thing with GameStop. We are off the high. I think the high was 370 today. 377. 377. So, man, fuck all that high frequency trade. Just make it illegal for high speed trades to even exist in the first place. Well, but it'll cause calamity in the markets. Feels like the right time to share a BlackRock TV ad. Okay. Let's laugh at this shit.
These are uncertain times.
What's going to happen in Europe?
What's going to happen to my retirement?
What's going to happen next?
Around the world, millions have simply stepped away from the market, taken a time out.
There's too much volatility and too few returns.
My yields have never been this low.
I'm sitting in cash, but at least it seems safe.
Yet life goes on. The future can't be put on hold, and your financial needs will only grow, even as they grow closer.
Jesus Christ, these rich fucks. I can't listen to this crap. I'm sitting in cash. Yeah, I'm sitting in cash too, Chad. We're all sitting in the cash. By the way, the due diligence about GameStop, that was like past about 200 points ago, dude. GameStop is not worth what it's currently being priced at in the market. But Mike, you are worth what somebody's willing to pay. Absolutely, dude. Whatever you want to say, man. Whatever, you fucking marginalist idiots. Get out of here. We don't believe your bullshit around here. We're not dumb. I know some of the OG WSB mods, and they actually had to work really hard to prevent people from doing exactly that pump all the time. I'm sure that's true. I passed up when GME was $50. I'm so stupid. You're not that stupid. Whenever there's a big pump and dump, don't feel bad for missing out. I guarantee you, there's gonna be more. Okay? There's gonna be more chances to get involved in dumbass pumps on the stock market. So you didn't miss out, okay? You didn't miss out on shit. Don't try to jump in now because you heard about it on CNBC. All right? That's my one piece of advice. Is like, if you're feeling like, I gotta get in. No, you don't. No, you fucking don't. Nokia booming? Oh no. Oh no. Oh no. Wow. Nokia shares jump as legacy tech brands become Reddit traders' new playgrounds. It's as if somebody found a newspaper from 2006 to identify which were the golden tech companies from back then. Then add in the perceived attraction of a low absolute dollar stock price in the single digits and a brand people remember and bought blindly hoping they had discovered the next Tesla. Legacy tech names and struggling retailers like BlackBerry and GameStop have seen incredible spikes in share prices in 2021 on the back of soaring trading volume from retail investors. On Wednesday, Nokia announced it is set to roll out the world's first 1 terabyte Clear Channel interface deployment with fellow Finnish telecommunications company Elisa, allowing us to leapfrog an 800G progression that other service providers are only strategizing about. So this guy, he closed his GameStop position. He bought some calls and then he sold them. So he's locked in his gain. He tweeted Tuesday that he bought $125K worth of February 115 GameStop call options. Calls are allowing hedge funds to go short 140% of GameStop shares could be seen as irresponsible, he said. To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that's played. And that game came undone. Instead of having idea dinners or quiet whispered conversations among hedge funds in the Hamptons, these kids have the courage to do so transparently in a forum, he said. What it provides is this retail investor phenomenon is there to stay. There are 2.7 million people inside Wall Street Bets. I think they are as important as any hedge fund or collection of hedge funds. Oh no 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 no. All right, so I gotta tell you, so GameStop is off the highs of the day, but still holding strong at 330. That's the new 52-week high today, chat. The GameStop 52-week high. Show the all chart, sure. It doesn't even, chat. It's so it broke. It's broken the all chart. It's broken it. Because we haven't actually closed for the day. The CNBC all chart doesn't work. There you go. That's better. Oh, this is the all-time high of GameStop. The all-time high of GameStop is today. It's right this second. BlackBerry? Okay, hold on. I don't know their stock trend. BlackBerry stock. Oh, look at BlackBerry. See, back in 2008, BlackBerries were the shit. And it never recovered from the crash. Oof. Oof. BlackBerry never recovered from the crash. Oof. So that's little spike. That's today. But man, BlackBerry got smashed by the crash. Have you seen the full? No, we haven't seen the full interview. Let's watch it.
My position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for small businesses. But I really want to tell you, beyond the 500 grand donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school.
That's from the video, Chad. I apologize.
That happened. They lost.
I was
their
like,
homes.
what? I'm on Do Not Disturb. What the fuck?
And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk?
Sorry
and
about that,
nobody
Chad.
helped and showed up to help my family. And then the third thing is a realization that instead of having idea dinners or, quiet, whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell. And I think that what it proves is this retail phenomenon is here to stay.
So one thing I wanted to say is this shows you something very, very important. And that's the power. That's the power of the collective. You have all these elites out there, and they have wealth. But all it takes, imagine if we actually coordinated for something important. And it was more than just the nerds on Wall Street Bets, which is a very small population of people, all things considered, in this country. People actually started to coordinate and act collectively. They could easily accomplish some massive changes.
There are 2.6.
He sucks. His top policy for CA government is 0% tax, LMAO. Is that true? Mike, he wants zero tax. Let me see this. We will cut taxes to 0% from 16% and drive growth, which will increase the state's revenue from 150 billion to 300 billion. No. Bad. Crap. This is his actual website. It sucks shit. How do we pay teachers $70K with no taxes? Dead-brained Wall Street, bro. Well, see, if you just cut taxes to 0, then everything will just fix.
7 million people inside of Wall Street Bets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest?
An investigation in New Jersey has been opened into Kellyanne Conway, where you were posting born of her daughter. Well, I'm sorry. If we talk about the Trumple who is absolutely out there abusing her daughter, we are doing a bad thing for talking about stuff that's in the news. Fucking dumbass people.
How can you be short 40% more shares than actually exist in the world? To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years.
Dumbass people who tried to try to cancel me for talking about stuff that was in the Variety. It was like 5 people, who cares? But it was pretty funny. I was like, they're like, Mike, stop talking about this story. I was like, no, I will not. Fuck off. Mean power equals people power. Seize the means of production to form a conscious collective to rebuild and contest the power of the upper class echelon.
Game came undone.
Well, I mean,
so
that may be that may be somewhat of an extreme example. Let me just go through a couple of things you said here. I have a hard time believing. I mean, you suggested that there's a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things.
There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era.
Not anymore.
But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along. For every LP that can't get into Melvin, they get into a copycat fund that works basically like Melvin. And so when the trade goes against him, then it goes against all these people all at the same time. So the reality is there are fundamental momentum investors in the market that are organized capital, i.e. hedge funds, and disorganized, loosely affiliated capital, i.e. Wall Street bets. And I think what you're seeing is the push and pull of that, and the realization should be that if every person was forced to publish their fundamental research, it would be hard to distinguish the best version of research from Wall Street bets and the best version of research from a hedge fund. They don't have an edge. And this is what you're exposing, is that edge is gone. And now all of a sudden...
This is actually a really, 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 really important point. The entire hedge fund, money management, broker game is bullshit. They can't do better than the market. If you just went out there and bought the market, you would outperform the highest paid money managers. In fact, I believe Warren Buffett made a bet on this. Warren Buffett money hedge fund bet. In 2008, Warren Buffett issued a challenge to the hedge fund industry, which, in his view, charged exorbitant fees that the fund's performances couldn't justify. Protege Partners LLC accepted, and the two parties placed a $1 million bet. Buffett has won the bet. The Protege co-founder who left the fund in 2015 conceded defeat for head of the contest scheduled wrap-up in 31/2017, writing, "For all intents and purposes, this game is over. I lost." Buffett's ultimately successful contention that was, including fees, costs, and expenses, an S&P 500 index fund would outperform a hand-picked portfolio of hedge funds over 10 years. The bet pit two basic investing philosophies against each other, passive and active investing. So Warren Buffett, by the way, Warren Buffett proved that active investing is a scam. And what Kamaith here, I'm trying my best, is proving is that Wall Street bets can do the same shit that any hedge fund can do. Thank you for the sub, BritBox Media. Thanks for the 2-1.
They don't have to be the bag holder to Wall Street.
But let me ask you this. I mean, but somebody from retail is going to eventually be to use your words, bag holder in this situation? Are they not? And do you think it's responsible for you and some other big names who tweeted about it yesterday and to get involved yourself, knowing that you guys are considered the Pied Pipers, that people are going to follow you into these trades and someone is ultimately going to get hurt after you and others are long gone, Chamath?
Dude, where was that message in 2008, Scott? Really? I mean, that's a joke. For example, let's look at Tesla. Who was right on Tesla? I'll tell you who was right. Every single retail investor. I was right. Elon Musk was right. Let me tell you who was wrong. Every single hedge fund. Name after name when it comes to innovation,
Pepe Law.
when it comes to growth, when it comes to people trying to do fundamentally useful things in the world. If it doesn't fit into the mold that Wall Street wants, they try to organize against it. And there has been pushback after pushback after pushback in individual names, and this is yet another form of pushback. And all I'm trying to say is the mechanics of how Wall Street has worked. And again, I wish you would ask this detailed question. Why is it allowed for somebody running a hedge fund to basically claim that they are market neutral, but be levered up? They take a $10 billion fund, and their prime brokers allow them to run $100 billion of notional exposure. Who thinks that that's fair? It's not fair to the retail investor, because when that blows up and a $100 billion hole exists in a fund, which, by the way, this is exactly what happened in 2008, the government bails them out. Who is the government? All of us. So, you know, retail has been the bag holder before. Retail hasn't caused these things before. Hedge funds have caused these things before. So if you're going to talk about taking the gun away from the baby, let's make sure we figure out who the baby is.
Yeah, but do you think that you helped fan the flames and others like you, whether it's, you know, one of the Winklevi brothers tweeting about it, Elon Musk tweeting about it, that it's ultimately driving this stock up well beyond what the fundamentals say that it should be? I mean, I don't think you think, and you tell me, you think...
Is Tesla at where the fundamentals should be? I just showed you earlier in the stream that the world market in batteries is $120 billion total. Tesla's worth 800 some billion. And they don't even have anywhere close to a significant share of that market of batteries. Like, what the hell are you talking about? They made 500,000 cars last year. GM makes 200 million. And Tesla's worth 10 times as much as GE for making 5% as many cars. So what are you talking about? Where the investment or where the valuation is based on the fundamental? What the fuck are you talking about, man? What are you talking about?
Do you think that GameStop is worth $350 a share?
What I can tell you is that when I put that position on, $125,000 position, I used it to acquire knowledge and learning. And what I was trying to figure out is how these positions move in the modern trading era. And what I can tell you is, up until that point, the setup made no mathematical sense. How do you be short 140% of a company's shares? That wasn't retail.
Well, maybe that's a question for regulators, that maybe the way that that's allowed to happen needs to be examined. But
I'll tell you how it's allowed to happen. It's allowed to happen so that hedge funds can charge 2 and 20 to their limited partners.
Have you seen the Fox Dow cow? Does anyone have a clip of this? I want to believe this. I want to believe that he said that they should ban, but you know, it's pretty funny that they're, you know, the same. God, I hope it's true. Please be true. Please be true. Please be true. I need the video. I need the video. All right, Smoked Prophet. I'm believing this link.
Here's Scott Shellady. Come on in, Scott. You've always got a good opinion to express. Look, I'm calling this a casino-like atmosphere. And I'm saying that some of the big hedge funds are selling all kinds of assets to make good their GameStop losses. In other words, I'm saying this is spilling over into the rest of the market. What are you seeing?
You know, Stuart, I would agree with you because it's unsettling. It can't be seen as something that's going to make you feel confident about the market when these types of moves can happen, number one. Number two, it's taught us that some of these funds that short these things...
Okay, first of all, Is this guy's first time ever watching stonk shit? This stuff happens constantly. This stuff happens constantly. What is he talking about? This will rattle your confidence in the markets. Dude, this happens all the time. What are you talking about? I showed earlier examples of Crocs shoes, Enron. There's literally a billion examples. Not literally a billion, but there are thousands of examples of just this type of move.
That's a dangerous game, and maybe they got a little bit too egotistical and got out over their skis. But the last thing is that these retail traders, who all the rules are written for protection purposes, have now commoditized themselves into a group that have taken these stocks so high that there's no way that somebody cannot get hurt, right? So it's like saying, I know there's going to be a car crash, and that's horrible to say, but there's no way around it. You rightfully said earlier on your show, when they want to go to sell, there's nobody that they're going to be able to sell to, and that's going to be the problem. So I think it's unsettling. I don't think it lends confidence to the market, and I do think it ultimately it puts everybody on shaky ground.
Who is left holding the bag? Back in 1999, with the crash of the dot-coms, it was the little guy who was left holding a stock that they'd bought at 100 and was now worth $2. Same thing going to happen this time around, you think?
Absolutely. I mean, who's going to want to get in? I mean, there aren't going to be, as these things rally, there might be some orders left in underneath the market to buy at a certain price. There'll be a few of those. But when they all come to get out of that movie theater because somebody yelled fire, that door is only so big. So if you've got to be one of the first 2 or 3 people out, or you're going to get taken to the woodshed, and that's the problem. There will be carnage, I can guarantee you. And it's not going to be the big guys, because they've gotten their fingers burnt and they've gone home. So now, you're right, it's a casino. It's the retail investor that's been commoditized into a big pool. Now they're powerful, but on an individual basis, there's going to be some carnage for sure.
Should the SEC...
I mean, obviously this is true. Like, clearly a lot of people that jumped in here have no fucking clue what they're doing. And GameStop is not worth this much. But it's just funny to see all the concern trolling about the little guy when it was the big markets. The hedge fund gets hurt. Suddenly we've got to control. Are you going to say that maybe we should control people's free speech?
The authorities, should they step in? And if so, what can they do?
I got a great idea. Ban social networks to talk about buying short stocks. Right, that's
Whoa! Wait a minute! We can't ban Donald Trump and Republicans from lying about a fake stolen election. That's tech tyranny. But when the hedge funds need bailed out, suddenly Big Daddy Tech, come and rescue us. Rescue the hedge funds. Fuck freedom of speech. Man, what a principled group they are at Fox News.
Nuts move, right? They do it for conservatives. That's how ridiculous it is. Now, there is a new class of investor now with these retail guys and gals that are now banding together. They're going to have to relook at how things are, because all of the rules, Stuart, I have the licenses to prove it, are written to protect grandma and the little guy, right? And now grandma and the little guy have all banded together into a big group, and they've done this to the stocks. They're going to have to take a look at these rules to make sure that there isn't anybody. There will be somebody left holding the bag this time, but they're going to have to relook at that and how they can make sure this doesn't happen to this extreme again.
I mean, when I'm looking for a stockbroker, I want the guy that's this fucking wide. Trump literally pumped trillions into the markets. It's funny, when they bailed out all those hedge funds multiple times, when the banks bailed out everybody on Wall Street by buying, you know what they did, chat, during the coronavirus earlier? During the coronavirus earlier, they literally bought companies' bonds. They went to the bond market and said, I'm going to buy bonds. That means they bought the debt of major corporations. They propped up the bond prices in the market. They gave easy access to zero interest cash to the big banks. The big banks can borrow from the Fed at 0% interest. How many of you would like to borrow? How many of you think you can make some money if I let you borrow infinite money at $0? How many of you could start your own business? How many of you could find an investment that made more than 0%, do you think? If I gave you a small loan of $1 billion at 0% interest, do you think you can make money on that? So that's what these rich fuckers get infinite money from the government, and they walk around like they're geniuses. And then they finally get a little bit of their own taste of their own medicine. And suddenly, it's a big problem.
To take their money, go to a prime broker, and all of a sudden get 10x multiplication on that money. That's the problem. You have trillions of dollars of notional being traded by these organizations. You have maybe billions of dollars being traded by retail.
Let me understand this. Theoretical capitalism is based on complete information on the value everyone is paying for everything in order to make competitive decisions. He's saying that due to social networks, people know too much now and it's a problem. That's exactly what's going on, Alobert. Theoretically, when you go to economics classes, not business classes, because in business school, they don't believe in perfect markets, okay? They don't believe in perfect markets in business school. When you go to economics school, aka propaganda school, they talk about perfect markets, which they assume is frictionless, costless. The transactions are frictionless, costless, and everybody has perfect information. They're also instantaneous. Now, all of those assumptions are wrong. They're not even right about stock trades, which we saw earlier. All the assumptions about capitalism that justify the lack of regulation are all wrong. And they know they're wrong. The people that actually study the real world are called empiricists. And that's only part of the economics profession. You know, one of the things that the empiricists have found? That raising the minimum wage doesn't cost any jobs and just increases the wealth of the bottom. The only people that say that raising the minimum wage costs jobs are the people that don't actually measure it. And they're treated as if they're real. As always, drill does not miss. If you want to see a guy in a fox mask walking down the highway with a sign that says GameStop, power to the players, that's me, and I need water.
I want to get back to the issue at hand, which I don't feel like you answered the question. This idea of, you know, somebody's going to get hurt. You sound like you're an advocate for the little guy.
Frank Bob Joe says, isn't this scary since the only ones who really end up benefiting from this are BlackRock and Citadel, especially with the latter gulping up smaller hedge funds? While it may be good that hedge funds are getting hurt, the ones winning the end of the behemoths of those two. Oh, no, you're absolutely right. You're absolutely right. That was, if you go watch the stream earlier, we talked about this. We talked about this, that it isn't just Wall Street bets, people. People that are making big money are BlackRock, are the people that owned a lot of GameStop to begin with.
So to speak, right? But yet by getting involved, why did you get involved in the first place? I mean, you said that to get information. I mean, you wanted to make money on the trade. Come on, right? You wanted to make money.
By the way, they don't hire economics PhDs to be CEOs. They hire guys with MBAs. That should tell you everything you need to know. Business school is a lot different than economics classes. You know who they hire on Wall Street hedge funds? Do you think they hire economics PhDs? No, they hire math PhDs. And the cutting edge of economics is actually leading into empiricism and math for the people that actually get jobs in the real world. It's going away from the theoretical people. I study economics. Oh, no.
Hundreds of millions of dollars. So I wanted to learn. Why did I want to learn? When I saw that article in the Wall Street Journal, I had no idea about Melvin Capital, really. I had no idea about Wall Street bets, really. I had no idea about GameStop, except that it had been mentioned to me in a couple of tweets throughout the year. So I tweeted out after I read the article, hey, folks, tell me an interesting trade that I can put on tomorrow for a few $100K so I can learn, basically. That tweet got 10 million impressions and
heterodox. Oh, by the way, if you're heterodox or Keynesian or post-Keynesian or whatever, I'm not talking about you. I'm talking about the mainstream freshwater supply sider economics that has the austerity economics that has dominated our political system for decades. I'm not talking about the people that are now starting to surge up. You know, I'm not talking about the MMTers. I'm not talking about Mark Blythe. I'm not talking about Professor Wolf. I'm not talking about those people. I'm talking about what the mainstream was in Chicago that had control of our global system for decades. I'm talking about the Alan Greenspans. Well, and this is how they do it. This is how these scumbag Wall Streeters do it. They talk about pension funds for firefighters and teachers. They talk about grandma. That's how they do it. When they need protection, they bring out pensions for teachers and grandma. But do they care about teachers? Do they care about grandma? No, they don't. Fuck, I don't give a shit. They're happy to feast on grandma's corpse if it makes them money. But when they need protection, they trot out those tropes. So look for those, because that's when they're telling on themselves.
When I went through there, a lot of people pointed to GameStop and pointed to Wall Street bets. And
Thanks,
when
Dennis. I saw your
started
message.
to look around, what I thought is, my God, here is a dynamic about trading, about momentum, about stocks, about short interest, about gamma squeezes. These are not things that I know a lot about, and so I put in a small position to learn. And what I learned is that people can do fundamental research, come to a point of view that's diametrically opposed to organized capital, and they can be right. And I'm allowed to be on the right side of that. You know, it's not my job to go and defend a bunch of, highly compensated hedge fund managers against losses. And just the fact that for one time those folks lost, we can bellyache and cry on national television, to me is a joke.
Well, I mean, I don't
There's
think
a lot of kids. Hold on a second. There's a lot of kids and a lot of people on Wall Street Bets who have made money to pay off their mortgage. I read about a post yesterday of a kid that was able to pay off his entire student loans and posted it. That's amazing progress.
I'm not suggesting, and I'm not trying to come off that way, that I'm suggesting what's happened on Wall Street Bets or what this cohort of traders is doing is wrong.
It's not.
I don't think that there's much of a difference from, and I know it's been mentioned on this network already today, but the first thing I thought of in this situation was back to the Herbalife episode, where you had...
We're already at a point where officials have said, fuck grandma for the economy. Absolutely. We've lost over 400,000 grandmas and grandpas. And these motherfuckers are screeching for the economy to be open. And now they have the gall to talk about grandma? We can't shut down the economy for grandma. No, but suddenly grandma's useful again.
A fairly sizable group of well-known hedge fund managers decide to take the other side of Bill Ackman's trade. He was, of course, short. They all went long.
Thanks, James.
They made a fundamental case in their own mind, and whatever worked for them to have the conviction that they did to take that trade. Part of it was undoubtedly trying to hurt the short, who was Bill Ackman at that time. Maybe some of them did it through going to an idea dinner or whatever other forum, through personal phone calls or emails, and there was a large group of people on one side of the trade. I don't think it's any different. I don't think it's any different.
You just said it's not different. You're right. Idea dinners, that concept has existed for decades on Wall Street, where people get together in closed rooms behind closed doors and usher around names of companies, and they coalesce and decide to cooperate together. The guys on Wall Street Bets just do it in the public completely transparently. In my opinion, that takes a lot more courage, because you could actually be wrong. Somebody can actually say, hey, listen, what you said made completely no sense whatsoever. And so what is the difference? In my opinion, this is the modern day instantiation of that dynamic, just writ large and at scale.
The only
See, they're not insider trading dinners, more Gank. As long as you don't have insider information. And these billion-dollar hedge funds don't have any corporate espionage. They don't have any private investigators. They don't have anybody inside giving them tips on the DL, right? You know, they could possibly make billions of dollars, but all of the little accountants inside those companies who are compiling those reports, they never leak that stuff. That's all kept. It's amazing how it's all locked down and nobody knows. No insider trading there. No. You're allowed to talk about your ideas with your friends. My problem with a lot of Marxian economics is that their institutional knowledge is very good, but their mathematics that allows their ideas to come to fruition are lacking. Neoclassicals have the opposite problem, that their use of advanced mathematics, not even that advanced for mathematicians, obscures the inherent lack of empirical and institutional knowledge. That's why we have post Keynesians and we have new forms of looking at the economy that don't just say doctrinaire Marxist shit. Some doctrinaire Marxists are pretty bad at economics. I'm not gonna lie.
I'm concerned about is that
remember, money is made up. Money in the stocks are made up. They aren't real.
Inevitably going to be people who get hurt. I'm not talking about hedge fund managers. I'm not talking about them. I'm talking about the people who follow people into the trade, who think that this stock is going to continue to go up because that's what they've been conditioned to think in the pandemic.
What should we do?
Because all stocks go up, apparently.
What should we do? Not allow folks. Here's what will happen if you follow your logic.
The stocks are going up because the government shoveled infinite money to Wall Street. You didn't have a problem before. It wasn't a problem when the stocks were going up irrationally before for the benefit of the rich. But God forbid that stocks go up irrationally for the benefit of some random normal people. Suddenly it's a problem. Words like regulation are being said on Fox News.
Then you'll say, you know what? Retail doesn't know what they're doing. I think you're wrong. Then the thing will be retail shouldn't be allowed to participate in the stock market. I think you're wrong. And then you know what the inequality gap will grow and grow and grow. Because then what are they supposed to do then? Buy an ETF, a passive fund? They can't buy into hedge funds because the rules don't allow them to. So now systematically what you've done is you entrench poverty.
No, I mean, that's taking it too far. This is just accentuating those thoughts that Wall Street's a casino and nothing more. That's what this is perpetuating.
I don't think so. I think this is an example of if you are going to so massively oversell a company.
If you want to read some MMT stuff, one of Bernie Sanders' economic advisors, Stephanie Kelton, wrote a book called The Deficit Myth, Modern Monetary Theory and the Birth of the People's Economy. Stephanie Kelton's brilliant exploration of modern monetary theory dramatically changes our understanding of how we can best deal with critical issues ranging from poverty to inequality to creating jobs, expanding healthcare, climate change, and building resilient infrastructure. Any ambitious proposal, however, inevitably runs into the buzzsaw of how do we find the money to pay for it, rooted in the myths about deficits and that are hobbling us as a country. Kelton busts through the myths that prevent us from taking action, that the federal government should budget like a household, that deficit will harm the next generation, crowd out private investment, and undermine long-term growth, and that entitlements are propelling us toward grave fiscal crisis. MMT, as Kelton shows, shifts the terrain from narrow budgetary questions to one of broader economic and social benefits. What's important new ways of understanding money, taxes, and the critical role of deficit spending, MMT redefines how to responsibly use our resources so that we can maximize our potential as society. MMT gives us the power to imagine new politics and a new economy, and move us from a narrative of scarcity to one of opportunity. Check out the book. It's good.
To the extent that you're selling 40 more shares of that company that don't exist, and all of a sudden other folks are like, hey, wait a minute, this is going to get squeezed.
Here's
and
a link
buy it.
to this video
That's
chat.
just a smart trade. Retail saw it. Wall Street missed it, and they paid the price. So maybe, to your point, Scott, what regulators should do is say, hey, wait a minute, how can we allow companies to be 140% short? That doesn't make any sense. Maybe that's what should happen.
You think this overall situation is fine for the market? I'm also curious as to, look, you
finished straight, Tom. Thanks for gifting
companies public through SPACs. At a rate that others have not. You're relying on the integrity
Thanks for all the bits, man.
of the stock market itself to be able to do what you
Rapid
do
raindrop,
and be
thanks to the tier 1.
Doing it.
I thanked
you
everybody.
don't think what we're witnessing now calls into question the integrity of the stock market, that a lot of different stocks with seemingly no fundamental story behind them to this degree can see their stocks rise in this magnitude, and all
Prime.
of
Thank
that
you, buddy.
is just fine?
Integrity in the system is the precursor that caused GameStop to be sold short 136%, and for people to try to pile on and destroy a company in front of our eyes. That, to me, feels wrong. That feels pretty un-American, if you ask me. I think GameStop is a reasonable business. I think what they do is reasonable.
Of communism.
And so the fact that they shouldn't be allowed to exist because all of a sudden, we decide that they should be obliterated into the ground.
Well, they should be allowed to exist. They should be allowed to exist at whatever their stock should be valued at based on what their earnings are.
BBBY Prime isn't a bot? No.
$17, $18 not that long ago.
Who says that? Who says that? Do you want to make the same argument about Tesla? It's gone 10x in a few months. You don't know what it's worth. Let's be honest. Okay?
You don't think that Tesla's growth prospects?
Scott, I have my own model for the company. I'm allowed to underwrite however I want to own it. Everybody that bought that stock is also underwriting how they want to own it. And the point is, just because you're wrong doesn't mean you get to change the rules, especially when you were wrong, you got bailed out the last time. That's not fair.
Yeah, but doesn't mean that these investors who were short the stock were necessarily
Mother
wrong.
Mary, thanks for the tier 1 at 3 months in advance. Wow, appreciate that.
I still haven't heard you tell me what the fundamental case is for GameStop at 350 or AMC theaters, which have been closed for months and months and months, is worth what the stock's trading at now, or any number of these things, the way that they're trading. There's no fundamental reason why they're there. They're trading because there's this momentum cohort behind it, whether it's on Reddit or Robinhood or wherever else.
But Scott, why is that all of a sudden so wrong to you, this kind of momentum trading? Because, for example, if you look under the hood on every quant strategy, organized, quantitative, strategic hedge funds on Wall Street, those things are all momentum shops. They trade day over day, massively levered, small swings. So basically what you're saying is, hey, if retail runs a momentum play to squeeze a short, that's wrong. But hey, if Renaissance Technologies and somebody else does it, that's okay. That's what you're saying. You may not know that that's what you're saying, but that's what you're saying. And to me, that feels very unfair.
No. What I'm saying is someone's going to get screwed, okay? Someone's going to get screwed. And it's going to be it's going to be a retail investor who gets screwed because they think that this is the way the game works, that this is the new Wall Street. They're new to this game. Maybe they haven't been in the game that long. Not everybody, not trying to say that in any way, shape, or form, but somebody's going to get hurt. I'm not talking about the billionaire with the big house in the Hamptons.
They definitely care about the average everyday guy.
The person who thinks this is cool, fun, and an exciting way to spend their time.
I'm not taking away that there's an element of that, but you're
Barn
really
match. Thank you,
discounting
brother.
how smart so many of these people are. Okay? And all I would encourage you to do is spend a little time in these forums, go into the Discord server, and you're not going to hear a bunch of bros just sloshing around. You're going to hear a bunch of really, really smart people talking about things in fundamental ways.
Chamath, don't tell me that yesterday AMC Entertainment was a $5 stock, and today it's up 170%, and that's justified. Don't tell me that some of these names are justified to being where they are.
God, it's one company in one moment of time. What I'm saying is
there's like 10 companies, 15 companies, 20 companies.
You're broadly sweeping with a broad brush that says these guys don't know what they're doing, and they don't deserve to do what they are doing. And what I'm telling you is there is a small part of momentum, there is a part that's fundamental analysis, and then there's a part that's just sticking it to the man. I'm not taking you
Here's
away
business.
from that.
Thanks for converting.
But the reality is it's all allowed in a free
Buckaroo
market.
Samurai,
And
thanks for the tier
all of a
1.
sudden,
Welcome back,
if
brother.
you start to gate decisions by individual people, all you're going to do is systematically lock in institutional ways of making money for institutional clients, and I don't think that's the solution. If you want to go and address the solution, fix how risk-taking happens at the institutional level, fix the precondition, fix the ability stocks to
I turned
be
them
so
up. They're allowed
massively
again.
shorted in the first place. Change the business model of funds so that they're not forced to be these small net, highly levered funds. Change the leverage ratios. Those are all institutional decisions. But don't all of a sudden look at a short squeeze where money is being made by retail and all of a sudden say, hey, they could and may be the bag holder in the future, so let's make sure that they can never participate in the future. That's crazy.
Yeah, I mean, I didn't say that. I didn't say they shouldn't be able to.
You are saying that.
I'm not saying they shouldn't be able to participate.
Mr. Braindead, thank you for the tier 1.
You want to say, you're saying they should participate on your terms.
No.
On Wall Street's terms.
No.
In a way where they get when Wall Street can have the best of it, they can maybe participate on the side. But then when Wall Street gets the worst of it, their parents, their relatives will just come and bail them out.
Not what I said.
But that's what happens. That's what happens. America is constantly bailing out Wall Street. That's what happens. And it happened again with coronavirus. And it happened again. Why do you think the stock market's up? Because they have 100% conviction that the Federal Reserve will be there to give them as much make-believe money as they need. If there was any conviction that the federal government or the Fed wouldn't be there to clean up their messes, the stock market would be in the toilet right now, where it ought to be. Because you know what else is you know who else is in the toilet? Everyday people. The economy is smaller now than it was this same time last year. Why is the stock market up 30%? And it could be years before the coronavirus pandemic is over. Years. And even when it is over, are we going to be able to, are we all mentally damaged enough? Are we really going to go back to living as usual? A lot of us will never return to life before the pandemic. There are so many companies being strung along with the assumption that everything's just going to snap back to the way it was in January and February of 2020. But is there any evidence of that? But yet the Fed is there and the federal government is there, keeping all those companies alive with the assumption that it will be the same. But when we need money, we get $600. We don't even have our stimulus check. Joe Biden, the Democrats ran on these stimulus checks. Where the fuck are they? What is happening right now in DC? Well, for everyday regular people, we can take a couple months. We can slow chat it. We can slow roll it. It's Wall Street. There's something the next fucking day. They're flying in for Wall Street.
Participating. I'm glad they're making a lot of money. I just think it needs to come with a warning sign. There needs to be a hazard sign. All right? There needs to be a hazard sign.
The hazard should be, hey, FYI, for example, why isn't there more transparency in the reporting that hedge funds have to make? Every long position, every short position, and all the leverage they're taking every day. Why don't we do that?
But, sir, 2024, thank you for the 2-1.
You know why? Because people in retail would analyze that stuff so intricately, and we would know where the tripwires were, okay? The reason why GameStop happened, Scott, was not, again, because of a fundamental disagreement about valuation. It was because of portfolio construction arbitrage. Too much leverage, too much short selling, too many calls.
Portfolio construction arbitrage. Oh, my God. Chad, I don't want to explain it to you.
Too many put buying. All of that stuff contributed to this dynamic. That was an institutional dynamic that was created by institutional capital.
Yeah, basically what they're talking about is when a hedge fund makes an investment, they don't just take a bunch of money from investors and then go buy stock. They are then able to go to a bank or a financial institution that handles their trades and get massive leverage. And then they do a lot of complicated investment strategies, straddle strangles. They do a lot of put writing, a lot of call writing. There is a large complicated financial instruments. We're talking about asset-backed securities. We're talking about swaps. We're talking about a lot of different strategies. But the effect is that they are massively levered. What does levered mean? Okay, I mean, typically when you buy a stock, say your stock is $10, right? And that stock goes from $10 to $11. Well, you just made a dollar profit. You made a 10% profit. Not bad. Not bad. What a levered investment does is, say you have that, instead of that $10 to just buy one stock, you take that $10, you have that as collateral, and you go buy $1,000. You borrow $1,000 from your financial institution, and you buy that stock, that same stock. So instead of having one stock at $10, you have 100 stocks. So when it goes up $1, you don't make $1, you make $100. So your initial investment of $10 made you not $1, but $100 for the same move in the stock. You just made 100 times the profit from the same move in the stock. That's what hedge funds in America do. What does that mean? It means that if there is an unexpected decline, instead of you losing, and what happens if it goes down instead of up, is if it goes from 10 to 9 instead of 11, if it goes to 9, instead of losing $1, you lose $100. Wait a minute, you only had a $10 investment in the whole fund. Well, the fund is insolvent. Now the bank is insolvent because it lent you that money, right? So now the bank just lost $100 and it needs to go claw that back, or it has to write off $100. What if that loss is $1 million or $1 billion? Now you're starting to understand why Wall Street gets bailed out all the time. Because if banks start to fail, then the real economy can't work. Our debit cards don't work. Our ATMs don't work. Businesses can't make payroll checks because their revolving accounts on the bank that they have a relationship doesn't work. The money markets start to fail. You go to the bank, and when you try to take money out, it's not there.
I am riding high right now from the feeling of thousands of retail investors realizing how
Bulky Bob, thank you for
much
the 500
manipulation
bits.
is possible.
So this is the type of stuff he's talking about. And that's how Wall Street works. They're not geniuses figuring out ways. They don't know about where the world is going to go.
One of them a joy. Appreciate ya.
Thank you, buddy. My brain dead. Thanks for the tier 1 for 2 months. They're not out there knowing more shit than you do. They're idiots. They just have the position and privilege to borrow. And if things go well, they're billionaires. And if they go down, they get bailed out. Heads I win, tails you lose. That's Wall Street. And they didn't change it after 2008. They just made it the law of the land. They're too big to fail. They get to saddle up. And right now, for the last 12 years, they've been rolling well. They're on a hot streak. But the moment that changes, all of you are going to be on the hook. Just like it was for Corona. And what did the government do? They ran to the rescue of Wall Street. And you got a piddly, pathetic $600.
So if you created transparency in reporting, that probably wouldn't have happened because a regulator would have said, hey, guys, I'm not going to let you be short 140% of a company. That's not right. And then you know what would have happened? This squeeze would not have happened. Now, so if you want to fix it, I think you got to go and ask for the same transparency because you can't all of a sudden have your cake and eat it too. Let's have hedge funds operate in the shadows, but let's then basically lambast Wall Street bets because they actually have the courage to write their stuff down publicly where anybody can see it.
I mean, look, my point is that I'm not lambasting anybody, okay? I'm glad these people are making money. That's the way it should be. That's the way it should be.
Honestly, let's face it. No, you're not, okay? And, you know, the person that was on before you, no, she's not. And that's the issue. It's like because the rules are changing underfoot, people don't like that. Now, I'm not saying that there can't be better regulation, okay, and there can't be tighter rules. I get all of that. But what I am saying is that you have to be cognizant that we are moving to a world where normal, ordinary folks have now access to all the same information as institutional organized capital. And they will come to many of the same conclusions, sometimes at the same time, oftentimes faster, and sometimes to the opposite conclusions. And sometimes at the same time, sometimes faster. Okay. You will see more volatility like this in the future.
I want to see...
Hold on a second. The solution to this is more transparency on the institutional side, not less access and ability for retail.
I want to see the white papers on all of these companies that are flying and all of the deep fundamental research that suggests that all of these stocks, and there are way more than one. This is not one stock, one story. Okay? There are a lot that are fundamentally challenged in this environment, right?
I'm sorry, but how, for example, if we went back to Herbalife, were you supposed to adjudicate that and decide that one short thesis was better than one long thesis? Who are you to judge?
No, that wasn't my job.
Well, whose job then? A regulator's job before they can put the trade on? What are you saying?
Don't come here and tell me that you're suggesting that all of these stocks are up because they're fundamentally in that place.
I'm saying you and I both know that there's a massive distribution of reasons why people buy and sell securities. There's some that are purely value-oriented about backward-looking discounted cash flows. Some other people all think about future cash flows, future product innovation, future margin construction. Other people think about momentum. And that is allowed. If you look at hedge funds, there are strategies for any which way you want to play. Some folks only short companies. Some folks only go long companies. Some folks run a totally net neutral strategy. They all exist. And I think what you're seeing is a proliferation of that kind of diverse thinking and risk-taking in retail now. Because before, retail was largely known as long only. And now, for the first time, you're starting to see more sophistication.
Is the stock market now a day one AAA game release? Yeah, it is.
Here, and it could be wrong. Is that over time?
Okay, so what he was talking about, he talked about the different strategies of a hedge fund. So long only means that you only buy stocks, which means you only do well when the stocks go up. Only shorting means when you short a stock, you make money when it goes down. Net neutral are people that try to make it so they are they're picking specific stocks that they expect to go up, and they're picking specific stocks that they expect to go down, and they will make money based on their ability to pick the correct stocks. And they're ambivalent to the larger market conditions, right? That's the net neutral people, if that makes sense. That means they both go short and long. They're just trying to beat the market. Mike, do you agree with either one of these guys? I think that both guys are bad, actually. And that said, I don't think the solution is to protect the hedge funds. I just worry that a lot of people are going to get burned doing what amounts to gambling with these stock trades. The stock market is made up. Is GameStop worth $350 if you actually look at its business? Fuck no. But at the same time, stocks are worth as much as someone's willing to pay. If I had GameStop stock, I would not sell it for anything less than whatever it's trading for right now. And that would be justified. Don't sell, diamond hands. Oh my God, Jesus Christ.
Retail sophistication.
All right, if any of you dummies are in the chat who actually bought into GameStop and you've made good money, here's what I would hypothetically suggest to you if I was the type of person to give advice, which I am not. This is not financial advice. If it were me, and it is not me, I am not in GameStop. However, if I was, I would be taking off my initial investment off the table. Say I invested $1,000 in GameStop and it was at $5,000. I would sell at least $1,000. To be honest with you, I would sell half of it. I would double my money plus a little bit more, and then I would let things go. Or I'd be laddering out slowly over the next couple days. But that's what I would do.
I see we're discussing the failing GameStop, going bankrupt soon. Only making money off of buying used phones and selling them overseas.
Court for Jester, thank you for the tier 1. So that's what I would do. That's what I would do.
Any champagne socialists in chat?
Hey,
stock print, stock print, stock print.
Is that the stock guy? Oh, God damn it.
Will catch up to institutional sophistication, that the strategies that exist institutionally will exist on the retail side. And so my point in all of this is if you want to make the system better and healthier, force more transparency on the institutional side. Gary Gensler should get these guys to be just like what Kathy Wood does in ARC. It's so healthy for the ecosystem. What am I buying? What am I selling every day? What are my risk limits? Just make it transparent. And these kinds of dislocations may or may not happen in the future, but if it does, it'll be completely transparent, and you will see it coming.
Right,
and there's nothing wrong with that.
Let me ask you this, because we've gone on for a while. Can you stick? Can you let me take a break and we'll come back? Stick around.
Oh, yeah, sure.
Stick around. Let me take a break. I'll come back. We'll have more with Chamath Palihapitiya in just a moment. We, of course, will talk about Apple looking ahead to their earnings after the bell as well. We're back right after this.
Interactive
So that was the full CNBC interview. And GameStop right now, what's GameStop looking at right now? It's still holding about that 340 number. Ooh, there's a little bit of a downturn there, but they've bought it back up. It's kind of like sitting there that remember we talked much earlier in the day about that spinning top? Just around 340. Just around, by the way, The rest of the market is eating shit. The rest of the market is eating shit. GameStop, the bright spots in the market right now are all of the meme stocks. I saw this live along with the offliners in Azan's chat. Well, Azan chat offliners, what the fuck? Why weren't you watching me? What the hell? I thought there was a second part. Oh. Oh, was there a second part?
I ended up.
Is there a second part? Part 2. Here you go. Sorry, chat. I see it.
Jerry, and who I have on the show today, who at one point yesterday went short GameStop. I don't know where he is now. John, are you still with me?
Yes, I am, Scott. I'm still with you.
Are you still short? And you tweeted at Chamath yesterday something to the effect of, "This is how it's done," and then the stock just surged.
Yeah. Well, I know you'd find this hard to believe.
As opposed to real life money, the consequences are only felt in your heart.
Don't be a chud, gamble with fake money as opposed to real life. Okay, well, Ninja Pup, thank you for the 200 bits. Oh, man. The thing about this is there's an old saying in the stock market, which is the stock market can remain irrational longer than you can remain solvent. Just because we all know that GameStop should not be this price doesn't matter. The numbers are the numbers. And if you don't have the money in your account, your broker will liquidate your ass.
That's those spreads that I put on. I put on put spreads. And the reason for that, as you know, but I'll explain to the viewers quickly, is that you are limited in any potential loss to what you paid for the spread. So I put on hundreds of thousands of dollars of positions, just like Chamath, but I then spread it against other short positions in puts, thus creating a position where I know for sure, Scott, if the stock is above 60 by April expiration, I lose $45,000. If, on the other hand, some sort of rationality returns and that 136% short interest comes down and the stock comes down by April, if it's between, say, $60 and $30, I'll probably make $200,000 or $300,000. So it was me saying to Chamath, here's a way to put on a bet against the squeeze that's going on here. Chamath did a fabulous job buying calls, trading out of those calls, and making a nice profit. And by the way, Chamath, I also donated to the Barstool Fund this morning before we came on air, even before I heard that you did. And any of the profits I make from this trade, if it's 60 or below, all of that is going to be going to the Barstool Fund over with Dave Portnoy.
If it's 60 or below, LOL.
I think that's awesome. Can I say something? I just think like this is the exact thing that I'm talking about. I don't think that, John, you did a one-pager and a massive DCF. I think you're a sophisticated investor who, through a lot of experience, has figured out what you're good at. And, and when you saw this opportunity, your spidey senses went off and you put a trade on. And it's a momentum-driven trade. There is no difference, Scott, between John and, to be honest with you, most of the people on Wall Street bets. Nothing. Maybe the net worth. But I'm telling you, these kids are catching up fast because they know what they're doing too. And the reason they know what they're doing is because of companies like Google and things like the internet that just make every piece of information available. They give you access to compute resources. You could be a kid sitting at home writing models into Google Cloud that give you the same compute power as the best hedge fund, as the best investment bank. And this is what I'm trying to get across to you guys, is we are leveling the playing field. It is happening. And so there are a lot of people as compelling and as smart as John that you guys don't know about that are just behind a screen name. And I think that's okay. And I think we just have to embrace the fact that this is where we're going.
Sure. I think we also need to be cognizant, though, and
you want to see his one-pager, by the way? Are you going to hold John's hand and make sure that, before he crosses the street? Is that what you also
No, because John, because unlike you, John didn't suggest otherwise, that there were fundamentals involved. He didn't, right? So I don't need a one-pager. That's part of my point. But that's what we need to do.
So what are you, the free speech police now too? I mean, come on, Scott. Like, what are you saying?
I mean, that sounds funny, and I'm sure that'll play well on Twitter. But I don't know what does that mean. I mean, I'm saying that clearly we're in a moment of time in the market, okay?
So when you agree with the hedge funds, you're smart. If you disagree with the hedge funds, you're wrong, and you should be controlled. That's it. Now you've got to look into the future, chat. You've got to look into the future. If you agree with the hedge funds, you're A-okay. Disagree with the hedge funds, now we got to control you.
Obviously don't matter, okay? Nobody, I don't care who they are, is going to come here and tell me that the fundamentals are behind a lot of the moves in these stocks. They're just not, okay? Period, end of story. They're just not. It's a moment in time. Some say this is emblematic of a. Some say this is emblematic. Hang on. Some say this is emblematic of a bubble. Okay.
Can I ask you a question?
I'm concerned about people getting hurt in what may end up being a part of the market that's in a bubble. That's all.
When stocks trade down, okay, in moments of dislocation. I don't know if over the last 3 or 4 years you guys can throw up a chart, but there are times where you'd see tip-to-tail drawdowns of 5, 10, 15% over the course of days and weeks. What are we supposed to do in those situations? Just stop the market so that it can't go down?
No, but this is
just like you can't stop the market from going up.
This is a you would admit. I mean,
Scott, you're getting into trying to judge, and my point is you can't judge, so don't try. Okay? You have to understand and believe that there is so much information out there that people can be on a level playing field, and that the most important thing we need to do now is shine the light into the corner of the market that is still opaque. And there is only one area. Companies are forced to publish every single thing about themselves transparently every quarter, okay? ETFs publish their positions every day in some cases. Retail talks about what they're doing with transparency every minute. But institutional capital can still hide. And so if you want to create a truly level playing field that evens these things out and minimizes volatility, force these folks to show you what they're actually doing under the covers. And when you see that some of these funds are taking $50 billion and running it like $500
Crystals
billion,
and cats, thanks for the tier 1.
I think we will all say, wait a minute.
Okay,
that's
be right back.
The real risk in the room, not a bunch of guys, momentum trading like John's doing.
Look, I understand. I'm glad we had this conversation. I think it's an important one to have. It's a moment in time that we're going to look back on, and this may be the story of 2021. We shall see. It's a long year, and it's early. Last but not least, because I don't want to leave this out, and Kara Swisher would be mad at me if I did, the governor thing. Is that real? You really want to be the governor of California?
Here's what I will say. I think Gavin Newsom has done a terrible job. I think that people are leaving in droves. The crime is really high. Our education outcomes are the worst of any state. Our taxes are the highest of any state. Our air quality is the worst of any state. And so this is a state that I think is just so absolutely incredible, but right now is being run off the rails. And to the extent that we can recall him, and to the extent that my agenda, which I just tweeted out and explained, resonates with people, 0 state taxes, a minimum teacher salary of $70K, school vouchers so that you have school choice, $2,000 for every kid born in California. I think you would see a renaissance in California that would be glorious. So that's what I'm willing to say right now. First step is we need to recall Gavin.
All right, we'll leave it there. To be continued. Thanks for your extended time today. I'm glad we had this conversation.
Scott, can I just say one thing? I love you. Be on the right side of history, big boy. Be on the right side of history.
I want to make sure people are on the right side of this market. That's all, and not get hurt. Chamath, I'll talk to you soon. We'll take a quick break. We'll come right back.
All right, fuck these right-winger piece of shit. If you want more leftists on this platform and other platforms that actually go into deep dives about issues like finance and electoral politics, you're never gonna find a better stream than this one. Here's some things you can do. I'm posted YouTube content constantly. We had another Jimmy Dore video. We had a not safe for stream debate with conservatives where Vosh and I and Denims debated with a bunch of conservatives about voter fraud. You have the dumbass takes of uniting with fascists. Get in there. Get in there.